And it is a crisis. And I think it's very much akin to the crisis that we saw, well, our grandparents saw in 1929. You got the initial crash where everybody throws their toys out of a pram. We all get terribly worried. Banks start worrying about the value of the collateral they've got against loans, all that sort of stuff. The Fed comes in, has to rescue the situation. Calm is restored for a number of months, and then the real decline starts. And it's very pernicious.
You're watching Silver News Daily. Subscribe for more.
With global tensions rising and the world rapidly moving away from the US dollar, investors are caught in a dilemma: where to store their wealth safely. Some say cryptocurrencies hold the key, but today we're going to explore why silver, the oldest form of money, might just be the ultimate safe haven. Stick around, because what we're about to reveal could change the way you think about protecting your wealth in these turbulent times.
On this topic, I do see that there is going to be enormous clamping down on social media in this country. So anyone, again, expressing a non-socialist view, I think is likely to find that they're either ostracized by the mainstream media, if they're not already, or alternatively, you find that the providers like X, like Facebook and all the rest of it, are lent on by the government to, if you like, ensure that these views, the views, if you like, of right-wing people, even libertarians, do not get properly aired on their channels. So this is a time which is getting more and more restrictive in terms of freedom. And also, when you talk about freedom, I mean, the deployment of technology to identify who you are, where you are, and, are you anywhere near a scene of a crime, et cetera, et cetera, et cetera. All that stuff is just getting more and more intense. I mean, they're now able to identify rioters or people, if you like, part of demonstrations with facial technology and all the rest of it, using drones. They can identify virtually everybody on a march now. So this is something which is getting really very, very intrusive. And, it's very easy to say, well, these Just Stop Oil people, for example, are disrupting our lives. Yes, of course they are. But so if they're disrupting our lives, then they ought to be stopped, sort of thing. Yes, of course they should be stopped. But, the methods by which they are doing it are just completely removing any freedom we have. That, I'm afraid, is now.
As global tensions continue to rise and countries increasingly seek alternatives to the US dollar, the financial world is entering uncharted territory. Investors are scrambling to find safe havens that can preserve their wealth in these uncertain times. While cryptocurrencies have gained popularity, they come with significant volatility and uncertainty. But let's consider the perspective of Alasdair Macleod, a respected financial expert who has long warned about the instability of fiat currencies and the risks associated with the growing debt bubbles in the global economy. Macleod has argued that the move away from the US dollar is not just a passing trend, but a significant shift that could lead to a major financial reset. According to him, in times of such economic upheaval, tangible assets like silver, which have served as a store of value for thousands of years, become increasingly important. This shift away from the dollar isn't just happening in a vacuum. Nations across the globe are strategically diversifying their reserves, seeking alternatives that are less susceptible to the economic policies of any single country. Macleod's insights highlight that while digital currencies might offer new opportunities, they lack the historical reliability of silver, especially when it comes to preserving wealth over the long term. As we delve deeper into this discussion, we'll explore why silver, with its dual role as both an industrial metal and a store of value, might just be the asset that can withstand the pressures of a shifting global economy, and why, according to experts like Macleod, now might be the perfect time to reconsider silver as a cornerstone of your investment strategy.
You gained about half the initial fall. You then had this long, pernicious decline down to a low level where the Dow fell roughly, lost 90% or 89% from the top. by mid-1932. I won't describe the crises that came with it, like banks failing and all the rest of it. This is the sort of thing which, we can envisage being repeated today. But you can see that the structure of the market, of the bear market, is actually quite clear in advance. We can see this in advance. So to summarize, you've got the initial crash, where everybody throws their toys out of the pram. We all get terribly worried. Banks start worrying about the value of the collateral they've got against loans, all that sort of stuff. The Fed comes in, has to rescue the situation. Calm is restored for a number of months, and then the real decline starts, and it's very pernicious. I mean, we can see that. You can envisage that. There are other factors now which I think could change the timing of everything. And to my mind, the most important thing is the way in which tensions are arising in the Middle East. This, I think, is extremely concerning. It looks to me, when you get countries like America, the UK, France, and so on, telling their citizens, get out of Lebanon, they don't do that because they think there might be some vague risk. They do it when they're pretty certain that war is approaching. And they've also sent, fleets to go and sort of support whoever they're supporting. I mean, let's face it, is Israel. And this is going to bring in Syria. Syria will be attacked. Of that I have no doubt at all. I would expect Iran to be attacked probably after Iran has had some sort of response to the assassinations. I mean, the assassination of a Hamas leader in Tehran was really a very, very aggressive thing for Israel to do. Though I understand she hasn't actually admitted to doing it. Israel will be fighting for her life and as a nation. And I think that having got to this sort of stage, I see very little alternative, but Iran will be drawn into this. And I'm told that Iran has already mined the Straits of Hormuz and can close them off like that, electronically. So that sort of development, I mean, think what that would do to us. Think what it would do to the oil price. Think what it would do to markets. Think what it would do to gold. These developments are very, very serious and very, very disruptive, and would probably override that schema that I gave of a market which is likely to.
Let's take a moment to reflect on silver's remarkable history as a store of value. Long before digital currencies and even before paper money, silver was a cornerstone of global commerce. It has been used as currency for thousands of years, and its intrinsic value has been recognized across cultures and civilizations. This isn't just about nostalgia. It's about the fundamental characteristics that make silver a reliable asset. Alasdair Macleod often emphasizes that silver's enduring value comes from its tangible nature, something you can hold, store, and trade. Unlike cryptocurrencies, which exist only in the digital realm and are subject to extreme volatility, silver's physical presence has always provided a sense of security for investors. Macleod has pointed out that, in times of financial uncertainty, people instinctively turn to assets that they can physically possess, and silver, with its historical role as money, fits this need perfectly. Moreover, silver's dual purpose as both a currency and a critical industrial metal adds to its appeal. It's not just a relic of the past. It's a metal that continues to be essential in today's economy, especially in technology and manufacturing. This gives silver a unique position. While it serves as a hedge against financial instability, it also benefits from industrial demand, making it a versatile and resilient investment. As we continue, we'll dive into the current market dynamics of silver, exploring how its price is being influenced by global events and what this means for its future as a safe haven asset.
I think to put it in context, I'd like to tell a little story about my own childhood, if you like. because I was born and brought up in Kenya during the Mau Mau. Now, I vividly remember that there was a farm where two elderly people were murdered brutally by the Mau Mau. And this was reported in the press back in the UK. I mean, it was headlines, and you'd think the whole country was in insurrection, and this was, really terrible. But actually, at the end of the Mau Mau, I think a number like 64 Europeans had been murdered, whereas some 4,000 or 5,000 Africans had been murdered and tortured by the Mau Mau. So to put this into context, when you read something in the press, you think this is, this is absolute, terrible, widespread, etc., etc. It's not actually widespread. We've got clashes, discontent, if you like, with all the immigration, and this is something that you'll be aware of in America as well. Growing discontent about immigrants taking jobs and all the rest of it. And of course, this centers in some of the cities which have a lot of these immigrants. I think the other aspect of it is that with a Labour government, they are trying to deflect the, if you like, the whole story into this is a right-wing conspiracy. These are, far-right Nazi thugs and all the rest of it. Now, I'm sure there is an element of that, but there is absolutely no criticism of the other side at all. The reporting, if you like, from the government side, which mainstream media follows generally, is actually very, very unbalanced. But generally, I would say that unlike some of the continental countries, particularly France, and believe it or not, Germany, that sort of violence we don't really have in this country. You may get pockets of it. And in the past, I remember there were riots in Brixton, for example, and that was during 1980s. So these things do happen, but I think it would be wrong to read too much into it. And I was sort of slightly perplexed to see that some countries, like the UAR, I think was one mentioned, this is given a chance, sort of an advisory to their citizens: don't travel to the UK. You have to. I mean, this is just complete nonsense. So, move along, nothing to see, I think is probably it. But the underlying thing, I think the underlying theme to this is that anyone who is not a left-wing socialist is liable to be accused by the current government of being right-wing and therefore undermining the status quo. Now, that's a big, big difference from anything we have seen before. I think that's the important point, which is worth registering. But in terms of riots, it's a nothing burger, really.
Now that we've established silver's historical significance, let's turn our attention to the present. How is silver performing in today's market, and what factors are influencing its price? Recently, silver has faced some downward pressure, trading around $27.75 per ounce. This dip is largely attributed to a stronger U.S. dollar, which tends to push down the prices of commodities like silver. Additionally, positive sentiment in equity markets has further reduced the immediate demand for safe haven assets. However, it's crucial to look beyond the surface. Alasdair Macleod provides a critical lens through which to view these fluctuations. He argues that while the current dip in silver prices might seem concerning, it's important to understand the broader economic context. The strength of the dollar, according to Macleod, is a temporary phenomenon, bolstered by short-term market conditions and investor sentiment. But as global tensions escalate and the potential for a financial crisis grows, the dollar's strength could quickly evaporate, leading to a surge in demand for silver. Macleod also highlights that the equity markets, which are currently enjoying positive momentum, are building on shaky foundations. The massive amounts of debt accumulated by governments and corporations alike are unsustainable, and when the correction comes, it could be severe. In such a scenario, silver, with its dual role as a hedge and an industrial metal, could see a dramatic reversal in fortune. Moreover, Ongoing geopolitical tensions, particularly in the Middle East, could also play a significant role in supporting silver prices. As conflicts escalate, the demand for safe haven assets typically rises, and silver is no exception. Macleod often reminds us that in times of geopolitical instability, silver's historical role as a safe haven becomes even more pronounced. In the following steps, we'll explore how the increasing demand for silver, especially from industrial and military sectors, might drive its price higher, and why this makes silver a compelling choice for preserving wealth in today's uncertain world.
Situation where, with the outflows of capital accelerated by the carry trade, as individual institutions in the US and elsewhere would rush out and borrow yen in order to sell the yen to buy dollars and then invest the dollars in T-bills for a yield pickup, really, of about 5%, leveraged up so that your return on your underlying capital is probably 50% if you leverage it up 10 times. You can see how this thing was taken to excess. And this was why the yen rate against the dollar fell from around about 100 to about 161.5, which was the lowest level for the yen. The numbers are upside down, incidentally. You need to invert the chart. And then everybody got wind, if you like, that the Bank of Japan was going to change its policy and actually raise interest rates from 0.1% to 0.25%. Wow, what a shocker. But what it did was it triggered an avalanche of reversal of the carry trade, as suddenly there were huge losses on the capital side of the carry trade, particularly where people actually hadn't covered for the exchange risk. And at the same time, you were finding that the Japanese pension funds and insurance companies were making, I mean, they were facing quite big losses where they were going out into term debt. And so really what they were doing is they were trying to liquidate their foreign positions as the currency was recovering, because the currency was wiping out any profits that they had or making their bond losses even worse. So they were basically selling dollars, buying yen. And the selling of Japanese institutions' interests came at a very difficult time for the US market, because it was about that time there was some disappointing earnings coming through from, the Magnificent Seven, the top tech companies. And so you had this combination, if you like, which was driving down equities. And it is a crisis. And I think it's very much akin to the crisis that we saw, well, our grandparents saw in 1929. You have the first leg, where there is the panic. The panic subsides, the authorities come in, and in late 1929, the Fed actually did pretty much what it would do today. It went into the market and bought US treasuries to keep interest rates down. It made reserves available for the commercial banks so that their balance sheets were fine. Now, we do that with QE today. It's quite simple. They will do the same. They will have to panic and cut interest rates. My guess is after we've seen something like a 30 to 40% fall in the S&P, they will cut interest rates. I can see the meeting, emergency FOMC meeting today. When that happens, I think markets will steady. This is what happened from around about November 1929 and ran through to around about May to June in 1930. Then the market started its pernicious decline from having rallied about,
While the current price of silver may be experiencing some short-term fluctuations, it's essential to consider the surging demand that could soon change the market dynamics dramatically. One of the most compelling aspects of silver is its unique dual role. Not only is it a precious metal and a traditional store of value, but it also plays a crucial part in various industrial applications. Alasdair Macleod has frequently pointed out that silver's industrial demand, particularly in the green energy sector, is set to skyrocket. As the world pushes towards renewable energy sources, Silver's use in solar panels and other green technologies is increasing rapidly. In 2023 alone, the industrial demand for silver hit a record 654.4 million ounces, driven primarily by advancements in photovoltaic technology and automotive electrification. This trend shows no signs of slowing down, with some experts predicting that by 2027, the solar energy sector alone could require over 20% of the current annual silver supply. But it doesn't stop there. Silver is also critical in the production of advanced defense systems, making it a metal of strategic importance as global military tensions rise. Macleod emphasizes that as governments ramp up their defense capabilities, the demand for silver in military applications, such as in communication devices, weaponry, and surveillance systems, will only increase. This could significantly strain existing silver supplies, especially since mining output has been unable to keep pace with this rising demand. What's more, global inventories of silver are already under pressure. The Silver Institute projects a market deficit this year that could be the second largest ever recorded, following 3 consecutive years of supply shortfalls. Macleod warns that if these trends continue, we could see a scenario where silver becomes increasingly scarce, driving prices higher as industries and investors alike compete for the remaining supply. This growing demand, coupled with the limited supply, positions silver as a potentially explosive investment opportunity. In the next step, we'll explore how silver compares to cryptocurrencies as a safe haven asset and why, according to experts like Macleod, silver might be the more reliable choice in a world moving away from the dollar.
Far the most important thing to understand in terms of market valuation is the disconnect between bond yields and equity indices. Usually what happens towards the end of a bull market in equities is that you find that economic conditions are such that interest rates have already started rising, bond yields have already started rising. A tension develops between the valuation of the equity markets and the bond markets, and it sort of pulls apart like that, and then suddenly it snaps. This is, I think, what we're seeing. If you chart the 10-year US Treasury yield, invert it and put it alongside the S&P, you will see that an inverted yield and an S&P generally correlate pretty tightly. There have been exceptions. The first big exception was the dot-com bubble and in the years following that. The second big one was COVID, where with the suppression of interest rates to the zero bound, the yield on the 10-year US Treasury just collapsed down to less than 1%. The third one, which is the one we're in now, is the biggest disconnect in terms of valuation that we have seen in history. Now, it is closed a little bit with the yield on the 10-year US Treasury coming off a little bit, and at the same time, the S&P 500 itself coming off a little bit. So that gap has closed a little bit, but it is still the largest in history. We are now in a situation where having the S&P having continued to sort of climb while bond yields were climbing, that disparity is so great that the snap is now in place. It's just a question of what triggers it. And what has happened is that the institutions in Japan, in particular, over many years have sought higher yields abroad by investing in foreign bonds, particularly US Treasuries, and also some of the European bond markets as well. They have also invested quite a lot in US equities. So we have this situation.
As we dive deeper into the discussion of preserving wealth, it's impossible to ignore the rising popularity of cryptocurrencies as an alternative investment. Bitcoin and other digital currencies have been hailed by some as the new gold, offering a decentralized and potentially lucrative store of value. But how does this digital lure really stack up against the tangible, time-tested value of silver? Alasdair Macleod offers a critical perspective on this debate. He acknowledges that cryptocurrencies have captured the imagination of many investors, especially during periods of rapid price increases. However, Macleod cautions against the volatility and speculative nature of these digital assets. Unlike silver, which has thousands of years of history as a reliable store of wealth, cryptocurrencies are relatively new and unproven, particularly in times of global financial crises. Macleod points out that while Bitcoin and other cryptocurrencies have experienced significant price fluctuations, sometimes losing thousands of dollars in value within a single day, silver's price movements have been far less erratic. This stability is crucial when considering an asset's ability to preserve wealth over the long term. Furthermore, Macleod emphasizes that silver's value is not just speculative. It's grounded in its physical utility and historical role as money, which cryptocurrencies cannot replicate. Moreover, the regulatory environment around cryptocurrencies remains uncertain. Governments around the world are still grappling with how to manage these digital assets, and future regulations could impact their value and liquidity. Macleod argues that this regulatory risk adds another layer of uncertainty that investors should carefully consider. In contrast, silver is a globally recognized asset with well-established markets and regulatory frameworks, making it a more predictable and secure choice for those looking to hedge against economic instability. Additionally, Macleod highlights that silver's dual function, as both an industrial commodity and a safe haven asset, provides a level of diversification within a single investment that cryptocurrencies simply can't match. This makes silver not only a potential hedge against inflation, but also a critical component in industries that will continue to grow in importance. In the end, while cryptocurrencies may offer exciting speculative opportunities, they lack the historical reliability and tangible value that silver provides. In the following step, we'll discuss how geopolitical tensions further enhance silver's role as a safe haven in today's volatile world, reinforcing why it might be the better choice for long-term wealth preservation.
Certainly in the Christian sense, and even just in terms of common sense. I mean, instead of there being two genders, there are now, I don't know, 10, 15, whoever you talk to. Our language has we've got to be so careful what we talk about. You can't stand up on the stage and make a joke anymore. This is the end of phase one of Bezmenov's description, if you like, of how Russia undermines the morality of the West. And, we're seeing it now. We're seeing the fruits of this now. And of course, the other stages will come through, which basically are things like, crisis, revolt, rebellion, takeover by, the new strong men. This is sort of rather Hayekian, if you like, in the sense. And Bezmenov said if they actually think they're going to start running the West, then forget it, they'll be taken out and shot. That was the end game as far as the KGB was concerned. Now, fortunately, Russia fell over, or the Soviet Union rather fell over in the late 1980s. So it spared us phases 2, 3, and 4. But you can see where it's left us. It's left us, toothless as a society, completely disconnected from reality. Whereas the reality now remains in Russia. Which still has a very strong church, still has strong morals. And if you go to Russia, I mean, I haven't been to Russia, but I've seen enough footage, if you like, of what life is like in Russia. It's really going very, very well. And particularly since we brought sanctions against Russia. So, if you want to go somewhere with old-fashioned values and you don't care too much about politics, keep your nose out of politics, it's beginning to look like Russia is probably the best place to go. I mean, compared with us, where we have lost all contact with sensibility, really. I mean, it's just...
As we navigate through these uncertain times, one cannot overlook the profound impact that geopolitical tensions have on financial markets. Historically, periods of conflict and political instability have driven investors towards safe haven assets, with silver often being at the forefront of this flight to safety. Today, as global tensions escalate, silver's role as a reliable store of value is once again coming into sharp focus. Alasdair Macleod has long emphasized the critical importance of geopolitical stability in maintaining economic balance. He warns that the current landscape, marked by conflicts in the Middle East and rising tensions between global superpowers, could trigger significant disruptions in financial markets. When uncertainty grips the world, assets like silver, which are seen as safe and reliable, tend to see increased demand. Consider the ongoing conflict in Gaza, for instance. As violence escalates and humanitarian crises deepen, the ripple effects are felt across global markets. Macleod points out that in such scenarios, investors typically seek refuge in tangible assets that have a proven track record of retaining value regardless of political turmoil. Silver, with its historical significance and intrinsic value, naturally becomes a go-to asset during such times. Moreover, these geopolitical tensions are not just isolated events. They often lead to broader economic repercussions, including disruptions in global trade, fluctuations in currency values, and increased volatility in equity markets. Macleod highlights that in such an environment, silver's appeal is further amplified. Unlike fiat currencies, which can be devalued by political decisions, or digital assets, which can be affected by cyber threats and regulatory changes, silver remains a stable and trusted asset. This is particularly important when considering the potential for long-term conflicts. As Macleod notes, prolonged geopolitical instability can have sustained impacts on markets, leading to a continuous demand for safe haven assets like silver. This ongoing demand, coupled with the already discussed supply constraints, could push silver prices higher, making it an even more attractive investment. In the next step, we'll look ahead to the future potential of silver, considering both expert predictions and the broader economic trends that could shape its price trajectory. As we'll see, silver's role in preserving wealth.
I wrote an article about a Russian defector called Bezmenov, who was interviewed by Ed Griffin, I think in 1984. And he described a psychological operation, which was in 4 parts. But part 1 was basically to indoctrinate students, whereby they would lose all touch, if you like, with common sense, with reality, how it. Now, this indoctrination was in the 1960s. By the time Bezmenov arrived and had defected and was talking to Ed Griffin, he said he was surprised at how successful phase 1 had been. Now, we won't talk about the other phases, but phase 1 basically was getting this brainwashing idea into students. Now, remember that back in the 60s, you had student riots and all the rest of it. In this country, we had sit-ins. In France, they had real riots. I mean, Paris was a battlefield, really. And then you had the Baader-Meinhof gang in Germany. The red. Well, I can't remember what they're called, but that was just slightly after. But you can see how these things were all coincidental. And Bezmenov was making it quite clear that this was something that the KGB basically did through, if you like, useful idiots and all the rest of it. And the interesting thing is that those students are now the elder statesmen in business and also in politics. Their sons, who are imbued with the same disconnect with reality, are increasingly our business leaders and also our politicians. And this is why we have gone woke. I mean, we have just lost all concept of what is right and what is wrong.
As we explored the current global landscape, marked by economic instability, rising geopolitical tensions, and a growing move away from the U.S. dollar, has set the stage for silver to play a critical role in wealth preservation. But what does the future hold for silver? Can we expect its value to rise even further? And if so, what factors will drive this growth? Alasdair Macleod, a well-regarded voice in the financial world, provides a compelling outlook on silver's future potential. He argues that we are on the brink of a significant economic shift, one that could see silver prices soar as traditional financial systems face increasing strain. Macleod points out that as central banks continue to grapple with high levels of debt and the looming threat of inflation, the appeal of precious metals like silver is only set to grow. One of the key factors Macleod highlights is the potential for interest rate cuts by the Federal Reserve. With inflation data showing signs of cooling, there is growing speculation that the Fed may opt for deeper rate cuts in the near future. Macleod suggests that such a move would weaken the U.S. dollar, making silver more attractive as an alternative store of value. Lower interest rates tend to reduce the opportunity cost of holding non-yielding assets like silver, driving up demand and, consequently, prices. Additionally, the ongoing supply-demand dynamics we discussed earlier, particularly the surging industrial demand for silver, further support the case for a bullish outlook. As the green energy revolution continues and the demand for silver in technology and defense industries grows, the pressure on global silver inventories will likely intensify. Macleod warns that this could lead to a supply crunch, which would significantly drive up silver prices. Moreover, the current undervaluation of silver relative to gold, often measured by the gold-silver ratio, suggests that silver has considerable room to grow. Historically, this ratio has tended to revert to its mean, and when it does, silver usually sees substantial price increases. Macleod emphasizes that investors who recognize this potential early on stand to benefit the most. In summary, while the future is never certain, the confluence of economic, geopolitical, and industrial factors presents a strong case for silver's potential to rise significantly in the coming years. As we've seen throughout this discussion, silver's unique combination of historical significance, industrial utility, and safe haven appeal makes it a compelling choice for those looking to protect and grow their wealth. In the final step, we'll bring all these elements together to discuss why, in a world moving away from the U.S. dollar and towards an uncertain future, silver might just be the ultimate asset for preserving your wealth.
There is a problem. Cryptocurrencies are not legal tender. There is also a further legal problem, and that is to do with property rights in the case of theft. I don't know whether I've covered this on your show before, but they're basically two different forms of rights. If you've got something which is fungible, which is truly fungible, like credit, for example, or coin, or banknotes, someone steals them from you and goes and spends them in a shop round the corner, you can't have redress against the shopkeeper. You can only have redress against the thief. If, on the other hand, someone steals some of your furniture, or a painting off the wall or whatever, and let's say that it is bought by someone else with whom you have absolutely no connection, the thief has no connection with, and you can identify that property as having been in your possession, then that property, you can claim it back without compensation. This is what Jewish families have been doing against the Nazis. And, we have an example over here. There was a woman, the wife of some very, very rich mid-Asian, I can't remember, it's Kazakhstan or Kyrgyzstan or something. I mean, we're talking about billions, and she was spending enormous amounts of money, and the courts are repossessing her property. How can the court do that? Well, the court can do that because they are effectively the proceeds of crime. Now, the reason this is important is because every bit of Bitcoin is identified on the blockchain. It is not fungible in the way which credit is. It's not fungible in the way banknotes are. It's not fungible in the way coin is. So you have this problem that because it has been used by the criminal classes for hiding the proceeds of crime, for money laundering.
In a world where global tensions are escalating and the financial landscape is becoming increasingly uncertain, the quest for a reliable store of value has never been more critical. Throughout this discussion, we've explored why silver, with its deep historical roots, tangible value, and rising industrial demand, stands out as a particularly compelling choice. Alasdair Macleod's insights have guided us through this complex terrain, highlighting the potential vulnerabilities of fiat currencies and the speculative nature of cryptocurrencies. As nations move away from the US dollar and central banks face mounting pressures, the stability and reliability of precious metals like silver become even more apparent. Silver's dual role as both a safe haven asset and an essential industrial metal positions it uniquely in today's market. The ongoing surge in demand from sectors like green energy and advanced technology, coupled with potential supply shortages, could drive silver prices significantly higher in the coming years. Macleod's warnings about the fragile state of global economies only reinforce the importance of having a tangible asset like silver in your portfolio. While cryptocurrencies offer excitement and potential for quick gains, they come with a level of risk and volatility that many investors might find unsettling, especially in uncertain times. Silver, on the other hand, offers a balance of stability and growth potential that is hard to ignore. As we face a future filled with economic challenges and geopolitical uncertainties, silver emerges not just as a relic of the past, but as a critical asset for preserving and growing wealth. It's time to take a closer look at how silver can play a central role in your investment strategy. Because in a world moving away from the dollar, silver might just be the ultimate key to securing your financial future. And remember, as always, this analysis is meant to inform and educate. It's not financial advice. If you're considering making any investment moves, be sure to consult with a financial advisor to find the best strategy for your personal circumstances. If you found this discussion valuable, don't forget to subscribe to our channel for more insights like this. And let's keep the conversation going. What do you think about silver's potential in the current market? Share your thoughts in the comments below.
Up and up and up and up. Because apart from anything else, it's not the currency that circulates, it's the credit which is created, which relates to the currency, or to the money, if you like. Bitcoin is absolutely useless in that respect, because how can you build a factory? How can you do the business calculation to produce goods, which generally takes, you've got to set up the factory, you've got to buy the machinery, you've got to employ the people, you've got to do this, you've got to do that. Let's say, best guess, 5 to 10 years. What's the value of Bitcoin going to be, or credit based on Bitcoin going to be in 5 or 10 years' time? As a businessman, you cannot do the calculation, but you can do it with gold. You can do it also with paper currencies. Paper currencies happens to work in your favor because, you can sort of work out, or you can make an assessment as to what inflation is going to do to values. And that sort of underwrites the whole thing. This is why businessmen like inflation. But, if you're going to have something which theoretically is going to rise in value over the time when you draw down your investment in Bitcoin credit and you have to pay it back, you cannot do the calculation. It is completely useless. And therefore, any idea that Bitcoin will replace fiat currencies, or indeed be a modern equivalent of gold, forget it. If it actually came in, if it was, let us say, turned into into a legal currency by governments, we would go back to the Middle Ages, the pre-industrial revolution, because we would be completely unable to produce anything. So you can forget that. But the fact of the matter is that the price doesn't correlate, if you like, with the idea of its moneyness. It actually correlates with the NASDAQ 100 index. So in other words, what you're seeing is the same cohort of bulls in these high-flying tech stocks are exactly the same people who have bought into Bitcoin. And that, I think, tells the whole story. It's something which is merely a speculation. It is a bubble. It's been a wonderful bubble if you've been sensible enough to take profits somewhere along the line. But for those who have been buying when the ETFs came in, let's say, which is in the last year or so, it's, for a start, they're probably on losses now, and they'll lose a lot. In my view, I think it'll just go belly up, bang, that's it. That's not good news. It's a source of funds for losses which you have elsewhere.